Greetings, everybody. Today we will talk about factors to consider when selecting a suitable legal form for your business, advantages and disadvantages of various legal forms, other methods of business acquisition. If you choose to start your business from scratch, you will need to get registered. The factors that need to be considered when choosing the appropriate legal form for a business include the following: registration procedure, extent of control over business, sharing profits with others, taxation, financing, liability exposure, and other factors. Each legal form has its own advantages and disadvantages. A sole proprietorship is a business owned by a single individual. The advantages of a sole proprietorship include the following: easy and cheap to register and operate, easy to apply taxation provisions and low income taxes, complete control over business. All profits earned are yours to keep. The disadvantages of a sole proprietorship include the following: unlimited liability of owners who may lose all of their personal assets. Businesses can be financed only using personal and borrowed funds. Businesses depend on the owners, their skills, willingness, and ability to maintain operations. A general partnership is a business owned jointly by two or more people. The advantages of a partnership include the following: relatively inexpensive to set up and relatively easy to operate. No taxes paid by the partnership, as each partner pays his or her own taxes independently. Managerial responsibilities are shared by a group of people. If one partner dies, the partnership survives. Financing is easier to obtain as resources from a number of partners are pooled together. The disadvantages of a partnership include the following: disagreements between partners over decisions, sharing of profits between partners, personal and unlimited liability of each partner for personal decisions and the actions of other partners. There are also limited partnerships with general partners and limited partners whose potential losses are limited to the amount of their investment. A corporation is a legal entity that is separate from the parties who own it. These parties are known as shareholders. They invest money and obtain shares or stock in exchange for the invested funds. The shareholders elect a board of directors that runs the corporation. The advantages of a corporation include the following: the corporation is independent of its owners and exists as a separate legal entity. Limited liability of the owners, as they can lose only the amounts that they have personally invested in the corporation. Financing is easier, as anyone can purchase shares. Corporations are capable of attracting talented employees. The disadvantages of a corporation include the following: costly to set up and difficult to run because of regulations and government oversight. Abuse of power by managers who may act against the interests of the corporation by pursuing their own personal goals and objectives. Double taxation. Corporations' profits are taxed, and then shareholders must pay taxes on the dividends they receive. Other legal forms also exist. These include a limited liability company that is subject to fewer rules and regulations. Its members are not personally liable for the debts of the company, and there is no double taxation of profits. A cooperative represents a business owned and controlled by the users of its products and services. A not-for-profit corporation is an organization formed to serve some public purpose rather than to pursue financial gain. Businesses can also be acquired through a merger, when two companies combine to form a new company, or an acquisition, when one company is purchased by another with no new company being formed. Mergers and acquisitions typically occur to gain complementary products and conquer new markets and enjoy new distribution channels. Today we have learned that there are a number of factors that need to be considered when selecting an appropriate legal form for your business. Each legal form, specifically sole proprietorships, partnerships, corporations, limited liability companies, cooperatives, and non-profit organizations, has its own advantages and disadvantages. Alternative methods of business acquisition include mergers and acquisitions. Thank you for your attention. Please like and subscribe for more interesting stuff, and I'll see you next time.